Hey, what's up, traders? This is Trader Tim from eMiniMind doing a trade recap for Monday, the 13th, 2020. Today was kind of a continuation of the same types of things we've been seeing up here at highs, and this pattern of sort of gap up and then sell off, look like a top. So maybe it's just a 1 day sell off like over here, or a 2 day, but it doesn't last very long. So you have the gap up and the sell off. A couple days of, is this the top or are we going to keep going higher? And then continuing with either another gap up or just some fashion of breaking new highs. And that's exactly what continued at the, to open and start things off for this week. We had the gap up Friday, sold off. It was a bearish engulfing pattern, pretty strongly bearish candle as it relates to the prior one because the high and low of Friday just about encompassed the high and low from Thursday. And anytime I see a gap up at highs, I'm typically thinking, okay, we've got the potential for sort of a exhaustive move, and there's a good chance that if we start to sell off, we could then accelerate that move, in this case to the downside. But that keeps what I would call failing in the last couple of weeks here. So this reminds me a lot of January of 2018. And if we go back to here, January of 2018, we had the same sort of feeling throughout the month where we kept gapping up or at least kept moving higher, and then it kind of seemed like, well, we've got this little bit of a pullback. Is this the top? And then we would continue to push on to new highs. So what did we know from that pattern of that rally pattern we had in January of 2018? Well, it ended with some screaming bullish days where it was open at lows, close at highs, and we did that 4 days in a row before we had the little bit more sizable pullback. And even then, we went on to make new highs before having a second leg lower coming down to the 2375. So I'm not one to come in here and try to pick a top, but as it stands, the pattern that we've been seeing over the last couple of months has sort of just held its course, if you will. So until something changes, I'm just going to continue, keep on keeping on, as the saying goes, and just continue to trade what works. That's right now has been swing trades and some day trades that are going either with the trend on the breakout day or counter trend when we have like a high ticket highs and sort of the very start of the downtrend. So on these few days in here that we've gapped up or shown a little bit of weakness, I've had some success with short trades, but otherwise it's really just been going with the trend. I had one trade today that I'm going to talk about here in a couple of minutes, and I'll just keep doing what's been working. Now this week we've got more economic news coming out that should kind of help either light the fire or put some uncertainty into the picture. And Thursday, Friday, big day with everything from jobless claims, retail sales, housing market index Thursday, consumer sentiment Friday, housing starts Friday. So it should be a pretty helpful week, I'm hoping, in terms of showing signs of this pattern continuing or a change in the pattern. Now, the trade I took today in the ES, I'm going to go down to the 30-minute chart. We started the day inside the prior day. So here's the high from yesterday and the low from yesterday, and we were basically right in the middle. We made a push early in the day towards the gap fill that did not make it all the way to the close from Friday, so that is unfilled at a 64.75. And you'll notice here in the 30-minute chart, see how we have these tails that are coming up from the bottom, or the tail is sort of pointing down. When we're inside of the first 30-minute range, I try and look for signs of what direction might we leave the first 30-minute range if we do break out. And when I see tails to the downside like this, where we end up with a hammer type candle, that sort of leans me more bullish, and I'm looking for signs for us to move higher out of the first 30-minute range. Now today we pulled back nicely right about the hour mark, or an hour into the day, pulled back to the halfway back of the day, and that was within smack dab in the first 30-minute range, because that first 30-minute candle was the high and the low for about really an hour and a half after the bell. So we pulled back to this 32.72, and up until then didn't have any trades to speak of. Was interested in possibly getting into the gap fill, but we made a nice halfway back here. Oops, let me grab that correct high, like so. Off of the open, had a little bit of halfway back that traded down nicely to fill. Come on, there we go. To hit its negative 23% target, and then the next one came up here and failed, and that was still in that 15-minute window where I'm kind of letting things play out, so I didn't have an opportunity to try and get in short. We ended up moving up to what was the high of the morning, and then coming back to the halfway back of the day, which ended up being the first trade that I took here, or the only trade that I took, rather. And so just drawing from lows to highs of the morning of trading hours only is always a good place to get a gauge of how strong we are. If an hour has gone by and we have not made a pullback to the halfway back of the day, that's a pretty strong market in whichever way the market's moving. So today, inside day, range bound, fully expecting a pullback to the halfway point here, not placing a limit order like to get in a trade at 32.72, just watching it to see if we get a reaction. We had a nice clean bounce, and at this point, the candles are starting to show this bullishness, the tails to the downside, pointing down, so the hammer candle. And so I drew up the very next retracement on the 512 tick chart here that broke the swing high, and it didn't double top. That was good. Sometimes we come up, the distance between the halfway back and the high of the day is so small that a little bounce basically puts it into a double top. That was not the case today. We broke nicely above the swing high, a nice clean push higher. So I drew up 32, ended up being a 32.74. And you can probably see where I'm going with this, or how the trade resulted. I ended up getting taken out to the tick, unfortunately. It happens, and it's just part of the way things go sometimes. Sometimes it comes 5 ticks away from your stop and turns around, and other times you get ticked out. And so I ended up getting taken out with the stop out on this long, but that's a setup I would take over and over again, and there's plenty of times that halfway back of the day you draw up the next 512 retracement in the same direction that the bigger setup was, in this case long, and play shorter there at the 50 and hang on for the breakout. Now, this was a little bit anticipatory because we had not made a new high yet on the day, but just kind of using what I had to go on at that point, taking a little bit of an anticipatory trade to try and get in before the breakout. And you can see it, it was not the cleanest of retracements. It came down, it ended up breaking the 61.8 and then spending some time around the 50 and then getting a move higher. So this push here, you could come in and say, okay, well, that ended up making a new high at this point. So, we could come in and take the prior swing low to highs. But when I see us break highs only by a tick or two, now we didn't have a high ticket highs, but when we only break highs by a tick or so, it doesn't give me, I'm not as interested in jumping in. I'd rather see this halfway back line up with the high price, as opposed to us just breaking highs by a tick and pulling back. So I didn't take any trades after that, trying to chase it. I just called it a day there with the one stop out. So, but in trading in this way, you're not exposing yourself to a ton of risk, which is the nice thing. It's like, okay, whatever, one stop out. Well, that doesn't even begin to really eat away at what was made last week with only, I think I had 5 trades. So you don't have to take a lot of trades to be able to take home a decent amount of profit. So it's better to focus on maximizing the winning trades that you do take, and then just limiting the number of trades. And you can do that by having a specific time window that you trade, trying to look at different places like the top of the first 30-minute range, the bottom of the first 30-minute range, the halfway back of the day, and trying to go with the trend when the market is trending. Now you pick 4 or 5 locations that you look for on the chart each day, and it really helps clarify and kind of build the confidence in what you're looking for. And so you're not just kind of sitting there twiddling your thumbs trying to find a move. So tomorrow morning we'll be doing our Tuesday live trading session, and you can check that out over at eminimind.com/VIP. And I hope everyone has a great week of trading. We will talk to you very soon.